Welcome back, everybody, to a macro recap video. Today, we have once again Will from Because of Bitcoin. Today, we're going to be covering, Bitcoin, what's been happening with the markets, crypto, stocks, all that good stuff. Will, why don't you introduce yourself real quick?
Hey guys, my name is Will. I am a analyst with the app Because Bitcoin. Now, we can say macro sometimes, but does macro really matter all the time? That's really the question.
Yep. We've had Will a couple times on the channel, and he always delivers a ton of value. Will, I think the last time we had you on was when Josh was on. I think that was probably like a month ago or something. Something like that. It's been quite some time. I think Bitcoin's moved around a lot. But yeah, let's hop right into it. What are you feeling right now with the market and everything? I think, last time we talked, I think Bitcoin was around 30K, even less than 30K, somewhere around there or something. And since then, we've obviously made a move up. So how are you feeling overall about the market right now?
Man, I was honestly expecting some kind of pullback, essentially, but man, I think that's complete wrong direction. As much as I would like to say there was going to be a pullback coming, I don't know if there is. I just don't know if there is. Some pretty interesting stuff, though. I would say that another one too is I've been kind of looking at some different charts and kind of analyzing some moves for overall, and I have some pretty interesting stuff. We can discuss it moving forward as far as charts go, but it's some really interesting price tag.
Yeah, I mean, dude, it's been absolutely insane the past month. It feels like we're in the middle of 2021 or something where all the shit coins are flying, everything's going crazy, and it's like, I was expecting a little bit of a pullback as well. Maybe we do end up seeing one before we rally again, in 2024, but what are we thinking about the, overall the Bitcoin price action? As we know, we jumped from 30K to 40K, and it's kind of been driven by, all the hype regarding the, the possible spot Bitcoin ETF approval. I mean, I'm kind of thinking the way you're thinking. It's like we may have a little pullback if, it gets, I think in January, they're going to be reviewing the spot Bitcoin ETF. That gets rejected. I think we'll have a little pullback. And then I think we're probably going to run again in, Q1 or Q2 or 2024. What are you thinking for, just Bitcoin itself?
Yeah, I'm thinking going into the end of the year, we'll probably see some kind of move up in a big way. And we're already kind of seeing that now. I think a lot of people are expecting this move currently to be the big move. Honestly, I'm looking for 42K roughly. And then potentially if we can really get there, 45, 46, somewhere in that realm, that would be my high end range. And then I'm thinking probably Q1, Q2, maybe even Q2, we'll see. Usually there'll be some kind of big shakeout before pre-halving, right? And I think that, and this is something I've talked to people about and nobody wanted to acknowledge because everybody's like, oh, there's always a shakeout pre-halving. I was like, yeah, but that shakeout could occur much higher than what most people are anticipating. That's the hard part that people tend to grasp is shakeout doesn't mean it has to happen at 25K. It doesn't mean it has to happen at 30K. Shakeout could happen at 48K. It could happen at 46K, right? The big shakeout. And that pullback could be down to 40K from 48. It could be down to 33 from 42. And nobody would see it coming, and that would be the big shakeout. But it happened much later and much higher than what most people anticipated. So you missed the whole move because you were waiting for the shakeout.
Yeah, I know. It's pretty funny to see all the bear cope and bear PTSD from 2022. It's like, guys, Bitcoin a year ago, at the beginning of 2023, we're sitting around, $15,000, $16,000. It rallied up in January of this year, and now we're sitting at almost 40K. Guys, we're kind of in the preliminary stages of a bull market here, and I do agree with you. I think we could see a run up to 50K, and maybe we pull back to 40K. And I don't think we're seeing 20K again. I do not see that in the cards at all. Maybe we see 30K again. That's possible. 20K is completely out of the cards. I mean, some of these people on Twitter are just driving me absolutely nuts. But, they're kind of the same people that were saying Bitcoin was going to go to 10K back when FTX crashed. So it's not too surprising. But what's really kind of caught my eye is the fact that nobody even outside of our little bubble in crypto, nobody even gives a shit really. No one cares. I think it's going to take, 100K for all the retail to come back in and everything. It's pretty nuts.
Man, like here's the great thing about that. The great thing about that is air and opportunity is there for those who continue to play the rally, right? And everybody else can sit sidelined until it's time to buy at much higher prices. I'm okay with that. Like, hey, the more people that want to sit on the side and tell me how recession and war and all these things are coming and they're going to affect everything and blah to blah, like again, I'm not a macro genius, right? Like I think I kind of am, but at times, like I wouldn't sit there and claim that I went to school for macro, like I'm analyst, as far as macro goes when it comes to that. But I would say this: it's not difficult to see. I would say the forest through the trees, and be able to understand when money is moving and when liquidity is flowing, and when you're starting to see sparks of life from something that looked dead, right? And that was the hardest part. I think a lot of people were willing to accept. I did get the pullback to 19K. Then I got the pullback to 25K. Then I got the second pullback to 25K. And again, it doesn't mean I'm a genius. It just means that I'm paying attention, right? Whereas everybody else is so micro focused. And I say micro because they say macro, I say micro. Micro because they're so laser focused on an event happening that they're not willing to watch the liquidity that is starting to flow in and that the sparks of life that are kind of starting to come back to assets in general, right? If we look at S&P, man, like
Oh,
it's about to break all-time high.
oh yeah, oh yeah. I mean, the stock market's been completely rallying, and I do think a lot of people are kind of caught up in the nitty gritty. I mean, someone commented, I've been talking about Coinbase, all the time on my Twitter. If you follow me on Twitter, I'm constantly shilling that. But it's like I've been talking about buying into Coinbase and everything since like $50 back in 2022, early 2022. I'm a big Coinbase bull, and some guy commented under, and he's like, well, how do you know they're going to make the move up? How do you know it's going to go up? Did some sort of TA show you? I'm like, my guy, like, you've missed the whole plot. Oh my gosh. I mean, we can get into.
Yeah, and
It's insane.
again, it comes down to seeing the forest of the trees. People can say some sort of TA like it's magic. It's not. It's not magic. I can give you data points as far as liquidity if that makes it easier for people. I think it's the lack of understanding, so they're pretending like it doesn't work, right? And that's how these markets tend to move, or at least people in the market, is they don't understand how to do something, so they try to dismiss it. And dismissing things is always the wrong approach when it comes to anything. Because if you're dismissing things, how are you even investing? Because if you're investing, you're speculating. And if you're speculating, then how do you not believe in TA? How do you not believe in data? And again, I can break it down to just numbers. I mean, here I'll show you a chart,
Yep.
and we won't even talk charts. I'll just talk numbers. That way, it's easier because I think some people they just have such a hard concept when it comes to talking charts versus talking numbers, because numbers don't lie. I can show you Bloomberg, I can show you Yahoo Finance, I can show you all of these, and all those guys talk are numbers, right? And so if you are you saying that they're dumb? Because if you're saying they're dumb, they went to school for this stuff, right? Like that's all I can tell you. Like if you say they're dumb, then then everything's a Ponzi, and why are you investing? Let's see here. So if we go to window and share, here we'll just break it down in a simplistic way. Look, range right here, right? Between what? Between 16K and 24K for how long? Let's put it in the monthly. 1, 2, 3, 4, 5, 6, 7 months, 8 months, and then 9 months breakout. All right, let's do it again. Now, again, I gave you the range, right? You could have bought anywhere in that range. You knew where the low end of the range was. You knew where the high end of the range was. And you could have bought from the mid end of the range once you started to see price move around the mid here, right? You didn't have to really buy down here. You could have speculated. But once you came here, I'll give you the simplistic standpoint. So from numbers, we don't have to view the bars on the chart, okay? 1, 2, 3, 4, 5. 5 months up here, okay? 5 months up here, drop. And then you're down here. You're at 15K. Now you're scared everything's going to end. You're scared everything's going to end here. What happens then? Well, when price recaptures in that 1, 2, 3, 4, 5 month period, you're back in there. That means you've recaptured the range. Once you've recaptured the range, guess what? Because you spent so much time here, this right here, we would consider, even from a data standpoint, just data, not even a bars, this would be a deviation, right? Because then what? We got 1, 2 months up here, and then 3 breakout. So I'm just talking months and price, right? Again, nothing to do with the bars on the chart, months and price. So for 5 to 6 months, we sat between what? 25K and 20K. So realistically, the second we hit 30K, because we hit 25K so many times, what made you think that we were going to go back below 25K? I would say nothing. There's absolutely zero reason to. You've already sat here and grabbed all the liquidity in this range. If directionality was favored down, we would have broken down from here. We would not have gone above 25K. We would have came back down to the lower end of the range, and we would have continued to range here from a data standpoint. Again, ignore the bars that you're seeing in front of your face. Talking price. We would have recaptured the 15K, and if we would have recaptured the 15K, we probably could have seen price drive lower, right? Again, it's just price. So if that were to happen and we were to come out down here, I would say yes, bears could have potential to go deeper, which means they could continue to consolidate the range and then move lower, right? But what did we see? We saw 1 deviation lower, right? 1 deviation lower, and then we saw price come back up into the upper range. You did not want to see price come back up here if you were looking to be a bear, right? You wanted to see price fail here. You wanted to see it come down here and range between 2 ranges, 20K and 15K, if you were a bear. You wanted to see price stay down here, again, for multitudes of months. This is just like the stock market. I came from traditionals, and that's why I like when people sit there and like, oh, well, the traditional market, blah, blah, blah. It's like, dude, I came from traditionals. I know how this works. I'm giving you a higher time frame outlook here. Like, I'm giving you literally a high time frame outlook on a monthly standpoint. I can't give you any higher. Now, if you talk 6 months a year, you're just being ridiculous. Look, a month time frame is plenty of time. So you had all this consolidation range, again, between 20 and 25. You had very little time here between 15 and 20. That tells you that price here was very undervalued, right? We wouldn't have sat here for only 3 months because you sat here for 1, 2, 3, 4, 5, arguably 6 months, right? 6 months you sat here. You sat here for half the time. That means that people, half the time, if you would have sat here and did this for 6 months again, you're probably going to stair step down again, right? It's a stair step. That's all it is. But because you sat here for half the time, people saw the value here. They thought the asset was undervalued, and they shoved, right? And then price came back down, bears in disbelief, and they shoved. And now guess what? Your range is gone. You're not coming back to this price range. It's not going to happen. Now people are going to sit there and try and call me out for saying that, but it's just what it is. Now you sat here for 1, 2, 3, 4, 5, 6. Look, we could use the same method. 6 months. Just go every 6 months, right? Every 6 months. 6 months, 7, 8, breakout. Not coming back below 30 now. Now you're above 30. So good job. You've done a good job paying attention and telling me how macro matters. And now we're above 30. And now you're not going back below 30. And that's going to be a hot take for a lot of people. It's going to be a really hot take. They're going to hope to God that it comes back down so they can call me on it. And now, what are we doing? Vertical accumulation. Now, people don't even understand what that means. I can show you what that means.
I want to see this.
It's not a hard concept at all. Like, it is not a hard concept. Want to see what vertical accumulation looks like? It looks like this. That's what vertical accumulation looks like. The FOMO starts to kick in at the high end of the range. That's where retail starts to get in. And when I say retail, I mean like just dumb money, right? Like people that, probably work at whatever and make very little money, and they're like, oh, this is my chance to make it rich. They get in up here between the high end range. Yeah. And these are the same people that are still saying, oh, did the charts tell you this? Did this tell you that? Blah, blah, blah. Like, and again, I'm not trying to be facetious to your followers or to the people that pay attention to your channel. I'm just trying to tell you guys, like, you have to see, look, when there's a bunch of trees, all right, and you look across the entire landscape and there's trees, we call that a forest, all right? We don't call that a bunch of trees clustered up across the landscape blocking your view. It's called a forest.
Mm-hmm.
You have to see the forest through the trees. That's just what it is. You can't be ignorant to price. You just can't. And so again, 6 months, boom. 6 months, we could just go with the 6 month theory. Because if you'd have bought it 6 months, you'd be at the low end of the range. 6 months, buy. 6 months, buy. 1, 2, 3, 4, 5, 6. We'll probably be somewhere up here. Boom. We'll be back down here somewhere.
Yeah.
Right? This is just range. We can call it range theory. We can call it whatever we want. But price, realistically, came down here, came up here, came up here. And that's what I'm expecting. I'm expecting price to just continue to drive. That's it. Like, and we could even make it even simpler for a lot of people. Because, and again, you can see here, like, this is something I posted a while ago. Everyone called for 22K. Guess what? I bid here. I posted it publicly that I bought at 25K. And people want to sit there and laugh. They laughed. Now look at them.
Oh, yeah.
Now they're talking about buying at 30.
Yep.
Right? And now I posted here and I said 33K, bid here. And what do people do? People are laughing. And where are we at? We're at 40K now. Right? Like, just, you got to, again, 33K, boom, look, I mean, you came back, you retraced. Everybody expected a retest, never got the retest. Retest comes later. And it doesn't even come back down here, I don't think. I think in a lot of these cases, like, just people are just so hopeful that they don't understand that, errant opportunity is there. And again, people are so laser focused on market cap. Market cap does matter. It does matter, but it matters when you're at the top, right? When you're at the top of the market, that's where market cap matters. These $1 billion layer ones, like, did people forget that most layer ones in 2021 were sitting around $30 to $50 billion?
Oh, yeah.
That's a 30 to 50x.
Yep.
Like, and arguably, I would say most, even these vaporware ones are going to probably be sitting much higher than that in the next cycle because there's more liquidity in the market.
Yep.
There is new money being printed every single day. Every day.
Mm-hmm.
Somewheres. I mean, Japan just did what, 100-something billion?
Yeah.
On printing into their, and they just stimulated their economy with that. You could say it devalues their currency. Yes, it does. It does. 100% it does. But they've also pumped their currency by a ton, at least temporarily. It devalues over time. People think the devaluation sets in immediately. No, it doesn't. Price has to adjust to devaluation, right? That could take months and years for that to happen. And that's why your candy bar goes from like 10 cents in the 1970s to like, $2 today. It's like, it takes time. Time is what it takes for those type of things to happen. Now, one thing that I paid attention to, and this is something I entertained a lot of people laughed at me about this. I was like, oh, this wick gets filled. This wick gets filled. Where are we at in market cap? Are we filling the wick? I'd say we're filling the wick.
Yeah.
This is USDT's total market cap. Look at that. Right here.
I know, it's hilarious. Huh.
They're literally going to fill the whole wick. That puts us up from here. That puts us up another billion, right? That puts us up another billion. And arguably, I would say Bitcoin probably hits about 42, right? Bitcoin hits 42, guys, like the FOMO's setting it. I'm sorry.
Oh, yeah.
Like, look. You can look at this from range. From here to here is a range. Where are we at? We're above that range. So we're probably realistically going all the way up to like 46 to 48K. Right? And then the second you set above 48, we'll say like in the 50s, you're going back to all-time high. Now, here's the thesis that I kind of came up with, and I'll let you kind of cut in here. I know you probably got some questions, stuff like that. Look, I identified this months ago. Again, deviation, accumulation, and arguably, and look, all I did for this one, look, let me just show you. It is not hard. It is not hard. Control C, Control V. Is that not really freaking close? Is that not really Control C, Control V? It's funny how the price movements are roughly within the same ranges. So let's say it plays again. Where are we going for Bitcoin? Right in that 42K range.
Yep.
Right in that 42K range. Like, Guys, come on. And we'll probably range here for multitudes of months. And people will tell you how it's going to retrace. And it's just going to do it again.
Yeah.
Deviation.
Up to the man.
Wait.
Yeah, I want to quickly give you the bear response. So this is not it's not what I'm saying, but this is what bears would be saying right now. Okay, they're saying we saw Bitcoin pump, and now we're seeing the altcoins pump, which I definitely want to talk about in a little bit. But now we're seeing the low cap shitcoins pump. I mean, people are just, you saw all these random little shitcoins have been going up like crazy, and that normally, signifies a local top, because Bitcoin pumps, the altcoins pump, then the little shitcoins pump, and that kind of, signifies a local top. So what would you say to that?
No, I mean, we can call it local top, sure. Look, I'm on board with local tops. We can discuss, bears can discuss local tops all they want, but it's not the top.
Oh, yeah.
That's the thing that people have to understand. There's a clear difference.
Yeah. Because I think we could be entering, soon in the next couple of weeks or so, maybe a local top. Maybe we, as you said, maybe we run up to like 45 or something, pull back a little bit to like 35K, something like that, and then we make another run up in 2024 near the halving or so. I think we'll tread around a bit because you know how Bitcoin works, but I think that's what I'm thinking is probably going to happen.
Yeah. I can give you the easiest playbook in the world. All right? This is the most easiest playbook in the world. You see this white line, right?
Yep.
Just pretend the price always has to come back to it. That's all you got to do. Like, no matter how high we get, at a certain point it doesn't. At a certain point it doesn't. But no matter how high we get, just pretend the price has to come back to it. Boom. 1. Boom. It can go all the way up to here. 2. Boom. 3. And then expect this.
Yep.
And that's the easiest way I can put it for people. I can't make it any more simple than that. Look, I'll show you the same thing. Look, and this is, again, it's about seeing the forest of the trees, guys. Look. 1, and you only got 2 here. You only got 2. That was it. And they actually went a little deeper, so realistically I can come up to like right here. So everybody got fearful here, and then they shoved. And now nobody buys back in here because nobody believes that it's gotten back above the trend, right? And tell me this right here does not look very similar to what we got going on right here.
Yep. Yeah. I mean, I've been saying it for a little while, but, if the spot Bitcoin ETF, BlackRock spot Bitcoin ETF gets approved, we could literally see within a couple days us get to the all-time highs when that time comes, like pretty quickly. And the crazy thing is, I think in our world, it's like crazy what's going on right now. The price is going up, but like outside of this, we're probably not going to see retail FOMO until 80K, 100K. I mean, last cycle, retail started FOMOing in, well, I guess I was kind of retail last cycle, but, I started buying in around 19K back in 2020, and then I really saw it pop off. Everybody's starting to get in around like 50, 60K, and I think we're probably going to see the same thing. I think we'll probably like 80K. Maybe it has to be 100K. So it's going to be pretty interesting to see how that all, plays out and everything. But now I want to, kind of talk about the altcoins for a little bit because we saw, I think last time we talked, I'm not sure if we talked about this on the stream, but I know we talked about it. Of course, we're both bullish on Solana. I have a Solana bag. I was accumulating a lot, $18, $19, $20. You're very bullish on it. We talked about it. And Solana absolutely ran. I mean, more than I thought it would, to be honest. And we saw the whole DeFi ecosystem pop off, and altcoins in general have been running. But let's talk about altcoins for a little bit.
Yeah, I mean, I have one if you guys want one.
Yeah, let's hear it. I want to hear it. Let's go.
Look at this, guys. Like, look at this. Tell me you've seen a more beautiful chart than that. That's all I can tell you. So if you look here, accumulation, rip, distribution, right? And now we can call this distribution for an accumulation. But this looks beautiful, guys. Like, look, I can show you how much. All you got to do is look for price to like cut the certain price zone every time, right? So price hit here, price hit here, price broke here, price resisted here, right? Price came over here and accumulated in the range. Price came back and used it as support. Price came down to it, used it as support. Price is currently sitting at support. Like, this is a beautiful. Like if we're talking altcoins that are about to pop off, and then get granted, I want to keep in mind. I'm giving you guys a gem here. All right? I normally don't do this live on stream. I normally don't tell you guys these things. Now, I don't mean gem in the fact that I know anything about Loopring, right? I don't know jack nothing. All right, I may have at one point, but I might have forgotten about it. But a lot of these charts, I just keep them on my radar, and I pay attention to where they're at with price. But when you look at this from a chart perspective, like this thing looks like it's about to pop off. It might sit here and kind of hang out here for a little bit, maybe another month or two of like drag, but this thing looks like it wants to rip. And we can see over here last time that happened, resistance and then pop. Now here's the thing, like this is and this isn't staged, guys. Like me and him didn't sit here prior early and discussing this stuff. So I want to be clear about that. So I don't come back to him if he was wrong. It was on me if I'm wrong. But you got a 2,000% gain off of that, right? Again, a lot of people got fearful here, took the rejection, probably sold here at the lows, as you can see right here. Look, 1, 2, 3, 4 months, an absolute tear, right? Now again, where was this at? Where was this at? It was 2021. It was the top of the bull. So if you were looking to accumulate Loopring at any point, it was below value here in the prior cycle, and arguably I'd say it's right where it's sitting at right now is the low end of the range here for Loopring.
It's sitting at like
tell
what?
Tell me that doesn't look good, man.
What is it sitting at? Like 22 cents? I've honestly never heard of Loopring. That's the thing.
So you're sitting at, now you guys can do your own due diligence on the project. I know they're involved in a lot of protocols. They have a lot of. I just looked at the general, right? They have a lot of partnerships and stuff like that. But right now you're at 20 cents. Prior market cycle, you were sitting at 2 cents. So you're up still 10x from your prior cycle bottom. That's a strong uptrend, right? That's a strong uptrend. And that's the way I'm viewing this. I'm like, okay, they didn't go lower than their previous cycle bottom. They came down, recapitulated basically just under the high, right? And this is more like the mid-range. This is more of the mid-range. We call this the POC, the point of control. It's where price likes to kind of levitate towards. Now, granted, this isn't, for me, I'll be clear on this. This isn't a long-term hold. Like, I'm not holding Loopring for like generational wealth. I'm holding Loopring for the actual bull run that I foresee, because it's 20,000 or 2,000% on a game, right?
Yep.
Like you got to hold your winners and you got to hold your losers. Now from the low, it was much more than that, right? If you just bought the mid range, now let's entertain that this was the low, right? How much did you go up?
God damn! I mean, you made a lot of money. You went from about like what, a cent to $4. That's not like a 400x.
1,000%, almost 22,000%.
What's the market cap of this thing?
Let's entertain something real quick. Let's entertain that it doesn't do that much. Let's entertain diminishing returns, right? We'll take 50% off the top for diminishing returns. How about that? We'll take 50% off the top. So 50% off the top. How much will you do next cycle? Potentially. I want to be very clear about that. If you took 50% off the top, I would say 10,000x, right? Now, again, it doesn't mean that necessarily comes for Loopring. Maybe it does significantly less, but I think it will still perform very well, right? If you were just looking for modest gains, I would just look for prior cycle all-time high. That's still 2,000, right? Yep. And you could exit on that, and you could hold, and you could let go on that. And if you look here, Loopring did do this. Look, it recaptured the previous market high, came back, everybody thought it was over, and then ripped well above it. So I would expect it recaptures the previous all-time high, comes back, spooks people, and then rips higher.
Yeah. I mean, dude, let me just say this. Like, I think evaluations are going to get out of hand. I mean, we saw Solana in the last bull run get to what, a $200 billion, $300 billion, something like that. I think $300 billion is around there. I don't think people understand how much altcoins are going to run and how high this thing's going to actually go. I mean, as you said, they're printing money every day. There's going to be a ton of more liquidity in the market. If you just look at like 2021 compared to 2017, I think 2025 is going to be massively bigger than 2021. And a lot of people don't remember, Ethereum literally ran from $80 to almost $5,000 from 2020 to 2021. Now Ethereum obviously is not going to produce those same kind of returns. It's kind of a rock at this point. It'll probably go to 10K. But a lot of these other cryptocurrencies, all these smaller ones like Solana, I think Solana could go to $1,000. And some people might say that's crazy, but I think that's very realistic actually. And a lot of these smaller caps could absolutely do 50x, 25x. I think it's definitely in the ballpark and not crazy.
Yeah, if we look here too at this one right here specifically, so this is Solana, right? Now you could see the rejection / accumulation. Now, where did you get the rejection? Boom, accumulation, rejection, boom, accumulation, rejection, boom, market bottom, roll out. Now keep in mind, I always pay attention to price. Now, where did I come up with this bottom? I came up with this bottom here, over here on the weekly, right? You had this basically kind of trade sideways here, bounce, bounce, and you continue to play this range multiple weeks right here. Now, granted, you had the same thing up here, and look, it played out well, guys. Like, I can't. This is why charts work. Look, 1, 2, 3, 4 months, 5 months, 5 weeks in this price zone, and what did it do? The second it got back above here, like this is where price loved to be. Price loved to be right here. Now, a lot of people missed the move because they weren't paying attention to everything here. What do we see? Undervalued, right? Comes up. Same rejection as previous price support. Again, price support turns into rejection. Boom, boom, boom. Breakdown. Boom, boom. Now, a lot of people hear the words time capitulation, right? So everybody they always talk capitulation. You need capitulation. This is capitulation. That's what this is.
Yep.
Now, if you want to know what time capitulation looks like, which usually is indicative of a reversal move, time capitulation looks like this. Now, how did I know that this right here was time capitulation? Because what did you do in this period of time capitulation? Well, your downtrend was anything under this red line, right? That was your downtrend. Anytime you came up to test this red line, came back up, test this red line, came back up, test this red line, you always came down. It was consistent resistance, right? But the second you got time capitulation, right? This is the important part, is the second you broke out of here. Even though price didn't break out, time capitulation set in the second that you traded sideways out of this range, right? That means that you are getting buys in the same price zone, right? And then if you notice, look how beautiful this is. Rejection, tried to reach but couldn't. Rejection, broke out, right? Just above the line. Open weekly, comes up. What does it do? It comes back and body retests the same zone. And this is what you should always expect for a great price accumulation range, is price to break out, come back and retest the previous bearish trend, and then roll out of it. And then look, you had a second chance to get it. And look, after that, what did you start forming? The second after you came up here? You started forming an uptrend, right? Price momentum switched from down to up. Lower lows, higher lows. Again, multitudes of ways to look at this from a TA perspective. We can call it magic, wizardry, whatever people want to call it. I hate when people sit there and just try to disprove something that they don't understand, right? It's like when you look through a magnifying glass and you see the moon. Is that fake? Do you guys think that that's fake? Do you think looking through that telescope and see the moon, you think that moon on the other side is fake? You think the stars are fake? You think I won't get into the whole world flat or round thing, but it's like, look, at the end of the day, again, trees enforced, right? Price came back down and retests. Again, you're seeing multitudes of rejections. I understand that 100%. But it's rejection flat and price momentum up. Higher low, right? We call that compression. What does that mean? That means bears are losing, Bulls are winning. Now, it doesn't that's not a perspective of take a bull or take a bear stance, be offended by what I said, blah blah blah. It's just saying momentum is in favor of upside. That's what it means. And so you have multitudes of opportunity here to get in, here, and people wanted to ignore it. And we call this coiling and an explosion, right? You get the coiling move into the explosion move. Again, it's just think of it as like a buildup of steam. It's just building, and then boom, pop off top, right? And now what we're seeing is price move here. Now, what I would expect is cool off, right? That's what I would expect for Solana. I would expect cool off. I'd expect accumulation. Why accumulation? Because we broke through previous resistances. Boom, boom. You can't come back down now. People are going to say we are, but the reality is, without some kind of systemic event, you can't come back down. And even if let's say World War III breaks out tomorrow. Let's go with that theory. You might get a spike down into here.
Yeah.
That's it. You might get a spike. You're not coming back down into here. You had too much time in this range that, anything below 25K, it's unachievable without, again, even in a systemic worst case scenario, this is where I would be paying attention. And if Solana were to come out to 25, I'd be like, scoop, right? Because it's a momentum trade. It's going to push it right back above here. You could have a fast, quick flip, or you continue to hold it into the bull. However you want to do it. But ultimately, I don't see this occurring without some kind of systemic world event, right? And if people are betting on that, I have some land I'd like to sell you in the middle of nowhere. And it's very expensive.
That's pretty funny.
I like to keep it real, man. I like to keep it real. Like, so many people they're unrealistic with expectations. They want to say, what if? What if doesn't matter. What is currently going on?
Yep, I know. That's how I feel about it. People have a lot of, doomer theories. What if this? What if that? But I got a question for you. What if the interest rates get lowered? Because I think they definitely will in 2024. I don't know if they're going to go back to zero, but I think they will get lowered, and we're going to see the floodgates open again.
Sorry, you broke up for a second.
I was saying, what if interest rates get lowered in 2024, which I think they will?
I don't know if it's on my end or what's going on here.
It's definitely my end. It's definitely mine.
All right. Now you can repeat it. I think that's easier.
Okay. Yeah, so I was saying, what if, the interest rates get lowered in 2024 and the floodgates come back? Because I think the interest rates will be lowered in 2024.
I've had a couple different theses. A lot of people, they're in the theory that, price comes down because there's some kind of systemic event, blah. I don't want to say blah, 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 because in those scenarios, that is a potential. Typically for cuts, the reasoning for a cut is something that's foreseen. But that again, we're going to get into, wrong time is still wrong, right? So if we theorize around cuts, people knowing what the reasoning for the cut is immediately, will there be a knee-jerk reaction? Potentially, yeah, again, but that's just a spike, right? It's just like the FOMC. We get those spikes that spike down and then rip right back up again.
Yep.
I think there'll be a knee-jerk reaction immediately, and then, the market will probably rip against that. And then probably 6 to 9 months later, we'll see potentially, there was systemic issues, and now everybody panic sells. Much, much later, at the highs, during the middle of the bull run, everybody sells off at the same time because they're panicking, and we get another bear run again, due to the sell-off, and then we have to reaccumulate again. I like to reference SPY for that. Really, I think a lot of people they don't understand the complexity, but I can show you a real world example of like how that works out.
Yeah, let's talk about the stock market for a little bit, because it's, oh my gosh, we're about to reach that local top again. I mean, it's been running.
I got SPY above support. Like, people are going to be upset if you're a bear. I understand. I would be upset too, because I would, if I was a bear, I'd have very little exposure, and my opportunity cost has been lost, right? I mean, if we look at SPY as a whole here, this one's pretty interesting.
This S&P 500.
What do you see here for my support line?
I don't think we're on SPY, FYI.
Well, it's
Yeah.
the same thing.
Okay.
S&P, yeah, yeah. So S&P
Oh yeah,
500,
yeah,
SPX, SPY, yeah. One's a more leveraged one.
yeah.
That's all it is. So I like to use SPX just because it's cleaner. That's really why. SPY is a little more up and down and stuff like that. But if you look here, look, we had August 2021, September 2021. This was resistance, right? Over here, November 2021, support. Over here, December 2021, support. Again, resistance, resistance, resistance. And where are we at now?
We're sitting at the local
Support.
top almost.
Perfect support. Now, what I don't like to see, I'll be realistic, is I like to see a little more wick because I like to see a little more fear before I drive. But usually when you get towards top end ranges, you'll see a little less fear. Again, less wick here, right? More wick in the next month. Over here, a lot more wick. Buy up, like they basically bought it back up and then ripped it down, and then tried to buy it back up above. Couldn't get back above, and started to fail. So arguably, I would expect the coming months going into next year to be very volatile. Again, people, getting fearful at the highs, resisting that price is going to break higher, and looking for lower pricing. And arguably, I would say we could deviate the high due to that. Now, keep in mind, I want to also credit Jackass to this thought process too. He's also in the same boat. But this is something I talked about, since February, March, and Max knows that on our team. This is something that I talked about, which was basically some kind of deviation, potentially up here, before some type of systemic pullback, right?
Mm-hmm.
Now, granted, this is a hot take, and it's in the bear's favor. The reason that I think that this is a possibility, now keep in mind, Jackass thinks this can go much higher before that happens, which is very likely it could, right? But I would expect that we could hang out here, maybe deviate maybe a little more, and then break down something like that. But I'll show you an example of that. Now, this is a multi-year play, so this is not a 6 months, 3 months, 9 months type play. I would expect we get a full bull run in crypto. We're going to get, SPX up pretty high, and a lot of things are going to move. But I'll give you the example. So this is a very similar move here as what we did between 2000 to 2008. So now, granted, we're expecting price to go above previous high before spiking back down again, right? Yeah. So a lot of people are in the boat that something is wrong and that the Fed is trying to float the market in some ways, and I'm in that same boat. But it's just understanding when that occurs versus right now. And we're in a systemic uptrend. I mean, if you were a bear after and you were like, I'm not buying here, I think that, markets blah, 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 you missed the whole move because you just wanted to be bearish, right? Yeah. Now, granted, eventually you were right, but did you actually buy, right? Did you actually buy? More than likely not, because you think continuously in a bearish thought process, which means that you came down, you came up, you got a second opportunity, you expect prices to go even deeper than that. You're like, oh, they're going to retest here now. And in reality, this was the low, right? And then price ripped. And you missed a decade, of just upwards momentum. Now, granted, I think the same thing plays out up here, just on a smaller scale. But I think we kind of play the upper end of the range here. As you can see, that's pretty freaking high, man. Like, you're talking like 5,200, maybe even 5,500 SPY, right? You're above all-time high. Everybody's getting super euphoric. And then you get a systemic pullback. Now, granted, these always come back and tend to be lower lows. Now, you can completely capitalize on these, right? Like, for me, this is not the market to stay exposed, but it's more the market to take advantage of exposure, right? So it means I plan on running this all the way through the bull run and then exiting. And then same thing with when I feel like crypto bull run is over, I'm done with stocks too. I'm exiting both.
Yeah.
So that right there, that's 2000, 2008. Now, granted, this is a 10-year span. Do you know what ran in this 10 years? I'm going to credit to Jackets for that, but it was gold. Well, if we look at gold Gold ran really freaking hard in that 10 years. Look, over here. So we had the 00, right? 2000. Now look over here. 2010. So gold basically ended when stocks ran. So we're probably moving into like a secular, basically commodities market. We talked about this actually last time with Jake or Joshua too, and probably some kind of uptrend in commodities. Now, granted, the SEC also did claim that Bitcoin's a commodity, so we have to keep that in mind too when we're looking at these. But arguably, I would say this is where we're at. But I'm just taking advantage of the upside. That's basically it. So I am a bull. I just think that there's going to be some kind of systemic event that they kick the can down the road on, and that people need to really pay attention for that to come. But for now, sorry if you're a bear, man. Just wrong timing, and wrong timing is still wrong.
Yeah, I mean, I don't really see a scenario like. Obviously, I understand the S&P 500 can come down and everything, but I think it's when 2020, I think around 2025, it's going to absolutely rip up, and then I think I think crypto is going to move along with it. I'm probably going to do the same where it's like I'm going to sell all my stocks when, of course, all my stocks are pretty much just baited to Bitcoin or whatever, Coinbase stock, etc. But I think with quantitative easing now in play, it's been in place since 2008. It's a kind of a different ball game where it's like the money printer is always going, which means assets are always going to continue to go up, and we're kind of in this weird world where it's like they have to keep kicking the can down the road. They don't really have any other choice. So I think it's like pretty much kind of is going to keep going up until eventually at some point. I don't think it will be anytime soon. I don't even think it will be in this decade where they'll actually face the real problems that the system has, etc. But I want to talk about real quick about Coinbase stock for a little bit. It's been, the big, I've been a big champion of Coinbase stock, talking about it since 2022, been buying it the whole time and everything, and now it's really starting to run. I personally think it could hit $1,000 plus in the heat of a bull market. So probably 2025, I think it could reach $1,000. Of course, that's not financial advice, just my opinion. Do your own research. But I'm super bullish on Coinbase stock, and I want to, hear your thoughts on Coinbase stock.
Yeah, we can get into coin real quick. That one looks pretty interesting too, but I always feel like if you want exposure, buy the asset. But the Coinbase, I think there'll be a beneficiary of price go up, but I think it's just an easy play, right? You got your uptrend, continue to follow your uptrend. Coinbase has these kind of weird scenarios where it likes to trend, fall, and arguably I'd say probably near top. You can fall back into probably previous price range, right? And then eventually, though, it will move with Bitcoin, right? It will move with Bitcoin. And this is the move nobody will see coming. It will be this is the Tesla move, right? It's the market maker move. It's the kingmaker of all moves, and everybody will miss that whole move. Do I know if it'll go to 1,000? I don't know, but I would say this: like if you look at RSI. Again, building in a similar fashion to what we've got here with price. So they're not building separately, they're building together. And arguably, I would say this thing continues to go up. Like, I don't know how anybody could argue that. If you look here, you do have a high time frame resistance here. But when you get that kingmaker move, I think it rips right through that. Yeah. Right? I think a lot of people expect some kind of resistance here, and it just continues to chat through. But that's where FOMO is full on set in, right? You got to look for that high time frame resistance at that point. And then if you're looking for that, you're probably looking for something to trade like this. When you start seeing this, it's time to get out, right? Because you could see some kind of big pullback into the range, and you could re-enter the play. A lot of people don't understand, like, buy and hold is a theory. It's a thesis that works. It does. But if you aren't able to move with the market, aka rotate capital to elsewhere, anytime you trade sideways, you're losing to inflation, essentially, right? Or at least you're losing your gains to inflation. Yeah. So whereas like from here to here, your gains could have been 500% just in that one move on its own. If you trade sideways for 6 months to a year, or get wrapped up in the bear market, finagle and kind of pulls you back down in the previous price zone, at that point, you've lost a significant amount of these gains due to inflation, right? And I mean inflation by money printing, so on and so forth. So like this time scenario here, you basically lost all those gains to inflation. So you kept up with inflation, but you haven't really beat inflation. Now, granted, if you bought down here, you're probably up, right? You're probably because anything below the 50% of the move, you're up. Anything above the 50% of the move, by the time this gets done doing whatever it's doing up here, right? When it gets to its high, wherever that may be, you've lost all your gains above that 50%.
Yeah.
And that's just due to time to inflation through time, right? Through inflation through money printing, so on and so forth. I like to point that out because I think a lot of people they get into this. Well, if I just buy and hold, it's like yeah, but if you buy and hold, let's say you made 10,000% from buying and holding, all the times that price went sideways or down, you probably only gained like 2,000% in reality against inflation, right? Against inflation, which is still that's a really good number. That's a really good number. But you have to buy the lows on everything to do that, and I don't think everybody's buying the lows. I think a lot of people are probably buying the mid range or higher, in which case they're losing.
Yeah. I'm a really big fan of Coinbase. I think it's a pretty easy trade to make considering it's like, okay, when Bitcoin runs and then crypto runs, obviously Coinbase stock is going to run. And of course, they're working, BlackRock's going to be holding their Bitcoin with them. They have their L2 base. They have a bunch of other stuff. I can, list them off. There's a ton of great narratives with Coinbase and everything. But my favorite part about stocks is the fact that it's closed on the weekend. It does have a set time, because Bitcoin running at 1 a.m., 3 a.m., and shit like that can be pretty hectic. So that's like kind of like
Well,
one of my favorite parts, I guess, that it actually closes.
they do say it closes, but you can still make after hour
Yeah,
orders,
I know,
right?
but
And that's what causes gaps and so on and so forth. But yeah, I get what you're saying. Like it's more hectic because you have to see it happen live with Bitcoin. But when you go to sleep one day over here and your coin was worth X amount of money, and you wake up like a week later and it's down here, it's almost the same feeling.
I guess so.
It's like I bought here, now it's here. But like, yeah, I get what you're saying. Like it feels more comfortable being able to not have to look at it. But if you have the ability to look at after hour orders, you'll see that price still moves even with after hour orders.
Yeah, I forgot about that. I don't trade anymore. I used to do a little bit of day trading, but I jumped out of that quickly. So, but now I want to talk about DeSci. So, do you have any interest in DeSci? DeSci's absolutely been popping off. My personal opinion, people say, "Oh, is it a scam? It's a grift." Well, it may be a scam, grift, whatever. But we also know there's a ton of money in healthcare. It accounts for like 18% of the U.S.'s GDP. CZ recently tweeted about DeSci. Brian Armstrong has this project, Research Coin in DeSci. It's a fairly small sector right now in crypto, but it's starting to gain a lot of popularity. I personally do hold a couple DeSci projects. I think they're going to absolutely run. What is your personal opinion on that entire sector as a whole?
Decentralized science.
Yeah.
I think DeSci has room, but I guess at the end of the day, it's what do people look at? What are they interested in? What can draw the most eyes? While I think that there's a lot of interest in money, right? Grants and so on and so forth. There's a lot going on there. Sorry, hold on one second. There's a lot going on there as far as money goes. It's more about can it drive retail interest, and I don't think it does. I will say that well, it's kind of like if I were to put a VR headset in front of you, or I tell you, hey, let's go look at this bacteria over here. Which one would you be more interested in?
The VR headset.
In looking at,
I guess
the VR headset. And I don't say that in a way that it can't drive institutional money, right? It can definitely drive. It's just how does that institutional money get on board, or is it already?
It is. So Pfizer, if you don't know, the biggest, or I think it's one of the biggest DeSci coins is VitaDAO. And VitaDAO essentially allows people to basically crowdfund / raise for their science projects through the DAO, etc., yada yada. And Pfizer actually, they just completed a round, and Pfizer participated in the round. So I think institutional money, my kind of bull thesis behind DeSci is, for better or worse, science and the whole healthcare space, there's a ton of grifting and a ton of interesting things that are going on. And I think, Wall Street is kind of going to look for the next grift in that area. And I think DeSci will be the next grift. And I think they're going to try and really pumping and everything. I don't know if retail's going to jump into it. I think retail, some of the tickers, like one of the things I'm invested in, Gene, it's ticker Gene. Like I think ticker Gene could do pretty good just because it's ticker Gene. You know, it sounds kind of interesting, or Vita. But I do understand what you're kind of saying. But I think right now it's pretty small. You know, I think Genome DAO is like what, $1 million market cap. I think Vita DAO is sitting around 30 million. You know, I could see it eventually maybe reaching, you know, the whole sector maybe getting to a couple $1 billion, especially in the heat of the bull market when everything's going to be pumping. Example, we saw Solana get to like 300 billion. So I don't see any reason why, this little sector couldn't, run a bit. But yeah.
Yeah, I think like again, I'm not trying to actually shut the conversation down with DeSci. I'm just more or less just trying to say like how retail reacts to your atypical things. I do think like if you're looking at it from a retail perspective, I think the interest is low. And I'll give you an example because like I was very bullish on things like that and so on and so forth. And other ones, well, in the beginning, as far as like 2021, 2017, so on and so forth, I was very bullish on a lot of these. We'll say NFT type and NFT, obviously bad name for just because of what it's gone through, but it's non-fungible token, which is something totally different than a lot of people think. They think it's JPEGs, but in reality, it's just something that kind of tracks and traces. But I thought, when I looked at that sector specifically, that those, real world use cases, they were working with BMW, some of the biggest tea companies in Asia, and many others, Louis Vuitton, a lot of big name brands, just through tracking and tracing. They were also doing logistics and lots of other things. And I think like when you look at it from that aspect, those are real world use cases that make sense. And they should draw in billions of dollars in revenue just through traditional institutions, but it never came, right? And these science, I feel like it's going to be another one of those that ends up, having real world use case and having, what it needs to be something that could change the world. But are people interested in changing the world, or are they interested in what's the next hype project, right? I would argue if people were interested in changing the world, they wouldn't be chasing all the e-news that they chase on a daily basis. They would be going and chasing, science and construction and, how can we evolve society? But that's just not where people are. People are degenerate gamblers when it comes to this space in a lot of ways, and they treat it as such. And that's why you could take advantage of a lot of people in this space. And I don't mean that in the fact that, I take advantage of people, but that's why a lot of people get taken advantage of, right? And they get played into different things and different spaces within this space. With the promises of riches, in reality, they're getting rinsed. But I do think that there's a place for decentralized science. I do definitely think there's a place for that. It's just, how do you get government funding if you're decentralized as far as science goes?
Well, let me interject right here. I interviewed my friend Patrick Sullivan, aka That Investor, just like 2 days ago. He's been pretty much just happy with the DeSci thing. I don't know how involved or how much attention you've been paying to it, but Josh actually and That Investor have been talking about DeSci for 6+ months now. And recently CZ put out the tweet talking about it, and then Brian Armstrong had the project he released for it, and that's what's kind of sparked this big boom recently with it. And I basically said to Patrick, hey, I believe DeSci as a whole is going to get bought out by Wall Street. I think it's going to get bought out by Pfizer and all of them, which is honestly pretty bullish. And he kind of agreed with me. I personally think it's going to end up getting bought out by Wall Street and big corporations, and that's just the harsh reality of it. Of course, it's decentralized science, but we kind of all know how DAOs are basically, interesting, not really. It's pretty hard to have. There's not too many, legitimate DAOs. Most things, decentralization is a spectrum. I think eventually it's going to get bought out. But I think really the bullish catalyst is really going to be CZ. I think there's some interesting talks of CZ releasing a DeSci project at some point. Of course, this is just speculation. But, I think the fact that he's put out a tweet, Brian Armstrong has a project in it, it's still fairly small. I'm not sure if retail is going to latch onto it. But I think retail latching onto it, by the time if it got to that point, if you got in right now, you would have already made significant gains. That's just my personal thesis on the whole thing.
Yeah, I mean, the money flows there if you're earlier to a lot of these, and you could make money. I think bull runs are driven by hype, which hype is typically in the most, ridiculous projects a lot of the time that you'll see it in the space when it comes to crypto. but I do definitely think like everything in the space. Like I'll give you another example: DApps and so on and so forth. Like things like optimism, stacks, and everything else. Those aren't super sexy when it comes to retail either, but they still see liquidity flow, right?
Yeah.
They still see liquidity flow, and that's kind of more the direction I'm heading with the conversation. Is like not that you won't make exponentials or money on these plays, it just you won't hear much about them as far as advertising or anything else. It'll be more like privatized it'll be money flow coming from directions that most people aren't really paying attention to. Not only to mention that too, but I don't think there'll be as much hype in the sectors as there will be in, again, just garbage. But I would say this, like CZ tweeting about things to me, I do think he's plans on probably creating a new venture once all this stuff kind of blows over. I think it'll be separate from Binance personally. That's why, like, I don't know what'll happen with Binance in the mid to long term. Short term, I think people will continue to bid it and play it. I think he's got some investments involved with it, and he'll probably continue to do so too. And then eventually, they'll end up dropping, and Binance will fade off into the wind. But whatever CZ's involved with, I'm definitely interested in. But it would be his project specifically, right? I wouldn't really necessarily be interested in the sector because I know how he is with market making and so on and so forth. Especially when you saw things like BNB that realistically should have fallen over but never did.
Yeah.
Yeah, I mean, again, I think the sector will see money. I think there's, probably exponentials to be made if you're early. I think just if you're late and you're thinking that that's going to make money in the bull run and you're buying in the middle of the bull run, I don't know if you'll make anything, to be honest with you.
Yeah. I mean,
in the upcoming bull run.
Yeah, I would say right now, though, we're in the early stages of a bull run. I would think, if you're buying in 2025 into DeSci, you could and probably are exit liquidity. But I would say probably for the next 6 months, I think really the next 6 months are going to be the last, like, primal ranges. And then I think kind of at the end of 2024, it's going to start to get, like, really heated up. 2025, we see the exit liquidity retail come in. That's just my personal thesis on this whole thing. I still think, if you bought, I was buying all of 2022, 2023, etc. And I think we still got some good buying left in 2024. I do definitely believe that because, we saw it, if you bought, example, just using the last cycle, if you bought in December of 2020, which was when I got it and I got on the Bitcoin at 19K, it tripled since then. And the altcoin run didn't even happen since then. So we may not see that same thing play out, but it's like, I still think we got another healthy 12 months of like, you can get in and still make exponential gains. Of course, there's always a bunch of little shit coins running, but just in general and everything. But now I want to kind of pivot towards Binance. So they announced they're shutting down their stablecoin this month. Obviously, we saw the whole thing with CZ play out. I honestly didn't think he was going to step down. I didn't think that would happen. But how does this what do you think how does this affect crypto as a whole and really just the future of this industry in the U.S. and in the world? But, the U.S. is basically able to control the whole world. So, yeah.
I mean, I think I said this last time that we talked, and I've said it on other shows, is like, I didn't see anything happen in Binance. Like, Binance, even though CZ stepped down, Binance is still fine.
Yeah.
Right? Crypto market's still doing fine. I mean, they're coming after him for multiple billions of dollars, so he obviously is not as broke as people say he is. And then on top of that too, like, I don't think it affects crypto at all. And this was always my thesis. I think that this whole thing, it's more of a stir of the moment. People were hoping that BNB can collapse and that it can bring prices down so that way they can get entries, in which case most of them probably would even take entries, even if that were to happen, because they'd be like, oh, it's going lower. It's almost like people want that COVID collapse to happen again. They want it to happen again. And it's just, that COVID collapse was a once-in-a-lifetime scenario. And people will never get that. They'll never understand that. They probably won't see something like that if they're in their 20s till they're like 40.
Yeah. I mean, I think we'll definitely see another like similar style where the market crashes on some crazy news, but it's not happening anytime, hopefully not happening anytime soon where we see anything nutty like we saw in 2020 and everything. So
there's been so much that has happened that could have brought markets down that hasn't, right? And that just shows you the resiliency of the market. I think in 2021, a lot of people saw the market didn't care. They didn't care if a project got hacked. They didn't care if a project even got rugged, as long as it had liquidity for them to put it into. right? They would still buy in the rug projects. The market, it doesn't care about these things. We had multiple instances of potential war. We had a war, right? We can sit there and say, oh, the U.S. was never in war, but I mean, we funded a war. We were in war. That's what it is. We funded a war. Not to mention, on top of that, we've had multiple instances of COVID's coming. Sorry, the thing is coming back. I didn't mean to say the word. The thing is coming back, and market doesn't care. Because why? Because it's already seen the worst. It's seen the FTX collapse. Done. CZ, guess what? He's having to step down. He's being forced out of his own company. Did the market even move on that news? No. Did BNB move on that news? No. I can't make it it doesn't care. It doesn't. A war could stir out tomorrow. The market may knee-jerk reaction and then continue moving. And this is what I've told plenty of macro analysts, man. I've told them so many times. Look, when you're on the beginning stages of rate hikes, be scared. Market's coming down. That's the knee-jerk reaction for the first half. But if you know that the Fed's going to 5, or the Fed's going to 7, we won't even say Let's just always assume the Fed's going between 5 and 7, right? Take that number. I'll give you the easiest explanation in the world. Cut it in half. Once you start getting past that midpoint, 2.5 to 3, you can start bidding. That's basically it. Inflation will have already started to be affected. It'll start coming down. And more than likely, the Fed will continue to hike and people will continue to fear-monger the market. And you just bid. This is what it is. I caught it on the inverse. What's it called? Or at least the hidden bullish divergence on Bitcoin. And I was like, oh, we're only at 3. I'm like, why is there a hidden bullish divergence on Bitcoin? And this was around 15, 16, 17K. And I was just like, well, there's a hidden bullish divergence. I need to start buying things. And so I just played on my TA, right? I just played on my TA, expecting a bounce. And that bounce turned into what? It turned into a trend. And that trend is turning into a full-on market reversal. And a lot of people, they're not willing to switch. They're just not willing. You got to understand, look, play the bounce. Bounce turns into the trend. Play the trend. Trend turns into a market reversal. Play the market reversal. Just play it as it's moving. Stop trying to pre-predict the next pandemic. Stop trying to pre-predict the next collapse. None of us know. Not even me. I don't know. It could happen any day. It could happen whatever. But I can tell you from pandemic to wars, what else could happen? What else could happen? What else could happen? We've already lost billions of people to the pandemic. Lost them, they're just gone. Right? Workforce is suffering. And this is why people sit there oh, the jobless claim. No, we don't have enough workers. A lot of them passed away. And we're having to fill slots with people that probably don't have as much experience, which means we have to do what? We have to hire 2 or 3 people for that one person that passed away that was really good at their job to be able to get the same work output. Right? So you're having to hire more people to equal that one person that was a really good worker. It's people don't understand. The older generation, those guys and those girls, they are proficient at their jobs. They're proficient because they have lots of experience. But who was the person that got wiped out the most during the pandemic? It was the older generation. So now we don't have them anymore. Now we have to put younger people in those positions that don't have as much experience, and so we have to hire more of them to get the same work output. There's so many ways you can look at this from an outside perspective and understand why the jobs market has not come down, why the workforce continues to thrive through what should be, ultimately a very hard time with interest rates, right? I mean, you're looking at 7 to 9% on home loans.
Yeah.
Who wants to pay 7 to 9% on their home? You're going to pay double, triple, quadruple the price of the house by the time you're done paying it in 30 years. It's absolutely insanity. But people are still buying because they have no choice.
Yep.
And people are still working because there's plenty of jobs.
Yeah. I want to know your thoughts on
did you?
Is it?
What's that?
I was just wondering, what are your
thoughts?
thoughts?
You broke up for a minute there.
Gosh, yeah, the internet here is shit. But anyways, what are your thoughts on the 10-year Treasury, starting to come down and everything? I want to know your thoughts on that.
Yeah, I'd never like to see. I don't like to see the treasury come down necessarily. I like to see the 10-year and 2-year and 5-year and whatever years stay up, because if they stay up, that means that prices continue to rise, right? But if they come down in a significant way, and you saw this in '07, right before the collapse in '08, where you get a huge capitulation of bonds. Anytime you see a huge capitulation of bonds, the market's about to get wrecked in a big way. So that's always something to watch out for. Again, that's not a macro thing. It's just paying attention to bond rates, right? Bond rates go all of a sudden from like 5% down to 1. You better be looking at charts and understanding, like, hey, what just happened? Why did people buy so heavy in the bonds? And more than likely, if they did that, there's been a huge rotation of capital, or at least capital interest, right? We'll say capital interest. We won't even say like capital from stocks yet. Capital interest to shift to safety. And if you start seeing a shift to safety, at that point, you should expect other capital that's exposed to risk to start moving to safety. And so you just get ahead of them and jump out and let the market capitulate, and then you can jump back in afterwards.
Yeah. I mean, I think it's pretty interesting, everything that's going on right now. I'm pretty bullish, though. I mean, everything's looking good. What are your thoughts on the possibility of some actual, real QE going down in the next, year or two?
Needs to be some kind of systemic event for that to happen. The market doesn't need QE. It's moving just fine without QE. A lot of people don't like to look at what, Powell did as direct injection for the banks and so on and so forth to float people that were beyond what banks are supposed to cover. In the scenario of a bank collapse. And I think that's BS, but some people they don't want to acknowledge that as QE, but it is. Whether it's a loan and they have to pay it back or not, they still got it direct injected for that time being. Even if they collapse, even if they default, even if they have to pay it back, doesn't matter. Like, they got QE'd for that time being. That liquidity then could be taken out, and that liquidity never existed once the bank collapsed, right? Essentially, there would have been defaults on both ends. So if somebody had like $100 million in there and the bank covers up to $250,000, then at that point, bank collapses, they only get back $250,000, and that $99,750,000 doesn't exist anymore. But they end up floating them so that $99,750,000 does exist, and that's what I mean by QE, because you essentially liquidity would have been drawn out of the economy through a bank collapse, through that person being completely annihilated. And I'm not wishing that people, lose all their money, but like, you got to understand, if you're putting all your eggs in one basket and you got all your money in one bank and you're beyond the FDIC, what they're willing to cover, you are risking your capital 100%. And this is really what should drive people to assets. Like, you should never really be that cash heavy. Yeah, I'm not trying to tell you guys financially what to do, but like, if you're that cash heavy, like, why are you not investing? Why are you not putting that money elsewhere to accrue money? Why do you have that much in your bank account? Right? Like, at the end of the day, I think that's always been the interest in keeping the FDIC at $250,000, is to incentivize people to invest and keep them in the markets with their capital, and to only keep on hand what they need to live, which $250,000 was feasible for a long time, but I don't know about now for some people. But at the end of the day, that's always been the scenario. But some people just don't like to be exposed to assets in general, and so they keep a lot of that in the bank. But that's your own problem. That's your problem at the end of the day. That's the way I look at it. Like, if you want to be underexposed to assets, that's fine, but understand the risk with having it in banks. And again, I don't know. Like, I think that QE has already occurred in those scenarios, and I think like any type of liquidity injection is going to be backdoor. It's going to be nothing directly to the public, like what we saw in 2021. Again, I want to point out that 2021, the COVID scenario, the stimuluses, people experienced that, and it probably helped some people. Didn't help others, but necessarily. But at the same time, people are now like, it's like they got their first hit of meth, essentially, and now they're hooked. right? They're hooked, and they're just looking for that next hit, but it doesn't exist. Meth's annihilated, right? It may be 10 years from now you might get another hit. So, and I like to use that analogy because it seems like you always got these people feeding for that stimulus, right? That's what they're wanting to see QE. They're wanting to see money come into their pockets for free. But that's just not, the government's not here to hand feed anybody. They're just not. Like the whole stimulus thing was an incentive to do what they were telling you to do. It was a control feature, essentially. It's like, we know you're broke, so we'll ease it a little bit. We'll give you a little bit of money, but you're not leaving your house, right?
Yeah.
That's basically it.
Yeah, and I think we're kind of moving to a world where it's like it's getting harder and harder to obtain assets. I think that's why crypto is so awesome. Even the stock market too, where it's like you can just go and buy and everything. But crypto, it's like you can actually get custody of the asset. You know, buying stocks is a little different of a situation. But, you cannot, just be getting cash and accumulating it nowadays. Like you can't, because the money printer is going to keep going and the dollar is going to keep, the purchasing power of the dollar is going to keep going down. I think everyone, who's 20 or older even has seen, the prices of everything just continue to go up over time. We're in a world now where you got to get assets or you're just going to get basically drowned out, essentially. I mean, I don't see any other, scenario where it doesn't continue to get harder, really.
Yeah, that's why I brought up that $100 million scenario, because I'm like, I don't know why somebody would be sitting with that much money anyways. Like, you have to be in a place to where you have to be invested if you're not trying to lose to inflation, right? You could have $100 million today, but 10 years from now, and I'll tell you this, 100,000 today is nothing close to 100,000 in 2012, right? In 2010. Like 2012, 2010, 100,000 today, that's like having $1 million then, right? You were much richer then than you are now. Mm-hmm. And that's why when people talk about, I want a man with 6 figures, or I want a guy that's 6 figures, I want a girl that's 6 figures, or blah, blah, blah. When you're talking, like, 6 figures is not a lot of money.
Oh, yeah, I know. It's not. Yeah. I know.
Like, when people talk about it now, to me, 6 figures is like the new 60K.
Yeah.
You're middle class.
I know. It's kind of interesting, though, but wage growth has not kept up with inflation, though. So even though, this, some people, et cetera, blah, 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 6 figures isn't that much, but the wage growth has not kept up with, the pace of inflation. So 6 figures still is kind of a lot to the average American, in a way. It's kind of changing, but, like, wage growth is still sitting around, like, 50, 60K for, like, a normal standard job. Has not kept up with the rate of inflation, so. But I know what the point you're trying to make is. But it's getting even harder. I think, now compared to 2012, it's much worse. And I think 10 years from now, it's going to be even, I think eventually, the wage growth is going to continue to happen, but, the purchasing power of the dollar is going to continue to go down. It will.
I will say this, like, for me, I would say this, like, your middle class has not really seen wage growth, right? While your lower class, and I don't mean that lower class is in their lower people, but like it's just what it's called, right? Your lower poverty class. I always want to be clear about that. Your lower class or your lower poverty class, that class has seen significant growth, right? They're trying to bump them up to 15 across the board. Why does middle class not get 15 across the board, or get whatever that growth has been across the board? Because I can tell you from when I was a kid, I'm older than a lot of other people in the space, but when I was a kid, like your average wage was like $5 an hour. And that was your average minimum wage. Now your average minimum wage, ranges between like 12 to like 15 or more. And when you look at it from that aspect, it's like that's almost a 2x on your lower class since then. Actually almost 3x, right? Almost 3x. And middle class has maybe moved up $5-10. They were probably closer to $30 to $35 range. And now they moved up to like $40 to $45 range.
Yeah.
And so it's really interesting how prices really moved as far as wages have gone, because I don't think they've been equal across the board at all. Whereas, like, I don't think that your $1 billion guys should move up at all, but they've moved up quite a bit too. Your CEO salaries have moved up exponentially. in comparison to your poverty classes and your middle class. And your poverty class moved up, but your middle class is staying roughly around the same range. And really, I think at some point your poverty class catches up to your middle class, and then where's your middle class? You have nobody to pay the bills at that point.
Yeah. I mean, I think we're heading towards a world where it's like the people who own the assets are going to continue to get richer and richer as they continue to print more and more. And we saw this, in 2020. It's like it doesn't even matter if you give, I guess, the lower class or middle class money, they do with the stimulus. It always funnels back to the top. We saw Amazon, Jeff Bezos get so much richer, the billionaires, Mark Zuckerberg. So it doesn't really matter. In any scenario where you print money, the asset holders are going to continue to get richer and the poor are going to continue to get poorer. That wage gap, that wealth gap is going to continue to grow and grow. And I think it's unfortunately going to keep going that way. But, that's why we're here. That's why we're in crypto stocks and assets and everything. And that's why it's important to capitalize on it, because you don't want to be poor. You want to be rich. So, yeah.
I think there's opportunity in the stock market too. I know there's always this consistent thesis that all your opportunity is gone, but I think it's more because people look at the same things. They look at Tesla, they look at Apple, they look at Nvidia, and they're like, oh, they're just so expensive. They got so much market. I think if you look at the lower end of the stock market, you'll see a lot of gems in there that I think could be your next Teslas, could be your next Apples. Not necessarily push them out of market share, but even if they captured a portion of the market share that any of these stocks hold, they can bring you significant gains, right? And I see that in stocks, and there's even more opportunity in crypto. That's why a lot of us are in crypto, because the opportunity is way bigger in crypto. You're essentially in crypto, you're investing in startups, right? And some of those startups come to fruition, and they produce. They do what they say they were going to do, and so on and so forth. It's just people always like to hold these assets as if they can make it through a bear run, not thinking about, possible dilution of token, aka just like stocks and so on and so forth, not thinking about capital costs or overhead costs because every one of these crypto projects are ran by a founder. They're ran by typically, a group or a team, and that team's getting paid. And if you're in an area in the market where liquidity is not flowing very well, these projects seem to take the biggest hit in comparison to stocks. And that's why people love these projects, because they can take a 99% hit and then go up another 400% above that 99% hit, right? So then, like, your exponentials could be going from like 2 pennies to like $20, and that's in a bull run, and that's the kind of moves that crypto makes. Versus like I can go and I can buy one of these EV stocks against Tesla. Oh, sorry about that, and I could potentially make maybe a 10 or 20x in the next 5 years.
Yeah. I mean, I still think there's tons of opportunity in the crypto market right now. The biggest, and like once again with the stock market, people don't think you can get a 10x in the stock market. Like Coin's definitely gonna run. Coin's a gem. Coin's gonna be one of those where it's like, pretty sure we all know it's gonna, it's definitely gonna run a lot more. We also got the Bitcoin miners, which I know you're not too huge of a fan of, but I think Riot's gonna do very well. So I think Riot's another one you can play into. It was sitting at about $3 at the beginning of this year. Now it's sitting at 13. I think that one's has a lot of room to run, a ton of room to run post halving when it's actually mining profitably and all that. But there's still a ton of opportunity in the stock market. Will, do you have anything else you want to talk about? We've been going for almost half an hour now. I mean, an hour and a half now. So, any other topics you want to touch on before we sort of wrap this up?
No, I will say, like, I do like miners to a degree. I think miners make sense. And, again, just like crypto, I think that they make more sense in a bull run than they do in a bear. So if you're buying them in the bear, they go into the bull, and they're not going to collapse. You can make exponentials. It's just I feel like they follow crypto, right? And I feel like if it's going to follow crypto up and follow crypto down, I'd rather have direct exposure personally, because I have better upside, I would say. Whereas a lot of people, they feel like the miner is a safer pick. I feel like miners will get crushed, just like with crypto will get crushed. When they get crushed, right? They get crushed together. And it's just because they follow each other with liquidity flows. And same thing with coin. I think coin will do exponentials. I think it's going to do extremely well. I think it'll see less drawdown than the overall crypto market for sure. I definitely think that. But I do think it will see drawdown when the crypto market comes down, because you're going to see transaction fees lower. Or not necessarily fees lower, but interactions with the crypto space and CEXs and stuff like that lower, which means their revenue is going to lower, which means speculation is going to lower, which means we're going to start to sell off the stock and all that good stuff. So I always keep that stuff in mind when I'm evaluating companies, and I'm like, all right, what's my upside versus downside? And right now, I think we're in an uptrend, so I think Coin's a great pick. Right, going into an uptrend, I think it's a great pick. I think miners potentially are a great pick, just depending on which ones you're going with, obviously. And if you're looking at it from those perspectives, I think like right now everything's going up. Like and I'm looking for bottom feeders.
Yeah.
There's things that have been neglected.
Yeah. I think there's a ton of opportunity, but it's been a really nice conversation today. I think we covered a lot. As always, Will deliver the alpha. Even showed us a gem today, which is pretty awesome. It's nice to see that and everything. But yeah, Will, anything you want to plug, before we wrap this up?
Yeah, I mean, again, I work with Because Bitcoin. If you guys want to check us out, our socials are, on Twitter and so on and so forth. We do YouTube live every day too, so that's another thing too. Also, if you guys could like and sub over here, that would be great too. I always love coming on the show and discussing macro and so on and so forth. I think that you have some of the best guests for sure, and hopefully, in the future we can continue to do these moving forward.
Yes, we'll definitely have you on in the future. And yeah, guys, that about wraps it up. Make sure you subscribe, leave a like. I'm posting daily videos here. Leave a comment. Let me know what you think. Where are we heading? And yeah, guys, that's all we got. Thank you for watching.